Good day, all. Ira Epstein of Linn Associates with your metals market update for this Monday, the 11th of February, 2019. And we are right now pushing the 3:30 time frame. You can see this is where the stock indices suspend trading between 3:15 and 3:30. At 3:30, they'll reopen for the next 30 minutes. What was interesting to me today is with the massive power in the dollar index and the big break we're getting in foreign currency markets, that actually the gold market and silver held up fairly well. They went down the key 18-day average of close numbers, what I call that line in the sand, and they held them. You'll see that in a minute. Our problem that we're facing, of course, is we don't know what's going on with the U.S. budget yet. It's like a moving target. You just don't know from moment to moment. And of course, the elephant in the room is this week's meetings in China between the U.S. and Chinese trade delegations. And these are the big boys that are meeting. So this is when the head negotiators will be there. I think it's Thursday and Friday that our head negotiators will be there. Right now, we've got the pre-assembly team discussing the topics. What have they done? So that when the other men come in, they're focused on one thing, and I promise you what that is. It's going to be intellectual property. It's going to be unfair treatment of American businesses. How do you get past the regulations when you've got one set for domestic, one set for who you decide you don't want to do business with? So there'll be a lot going on at that meeting. But in the gold market, we're in something of a correction. That's okay. Your high close was 1316.90. Today, you're down on the day right now, 760 at 1306.10 on the lead. All right, pulling back a little. When we look at an April gold contract, and this is a bar chart of April gold, the pattern is one of lower highs and lower lows. That has been downward. You've had rallies and again a failure. Where's the support in the market at this point, at least? The 18-day average of closes. Today's low, 1307.10. The 18-day average, 1307.90. So this is the pivot area that the market is working from. If this market were to not take out 1306.50 and take out 1319.50, what I think would happen is you'd be right back into the uptrend. You'd have the higher lows, higher highs over the 18-day average. That's the what if. If you close under 1306.40, you're going to give the bears some hope to the downside. Where could that hope go? Well, one of the numbers is the lower Bollinger Band in the 1283 zone. So you always look at that. In terms of momentum in the market, as you can see, the market is hanging on to being overbought. Why? And how do I define that? Any reading in the slow stochastic, which is SSTO, I define of over 70, and that's in other words, the indicator closes over 70, I define as overbought. The odds favor that as soon as the market reopens tonight, because I understand the math of the indicator, it's going to lose that right away. So it's going to be a very interesting day tomorrow. In the ETF GLD, you've got the pattern of lower highs, lower lows. You've managed to come down to the 18-day average of closes. Again, that line in the sand. And so often when a market's above it, it comes down and fights battles at that number. If we look at momentum here, the momentum is overbought just like the futures. When we come to GDX, in this market, if you look at the slow stochastics, you lost today the embedded reading. When you lose the embedded reading, unless it's gotten back, it'll be tomorrow because the stock market, these won't trade tonight. But if it doesn't get it back fast, real fast, what happens is it calls for momentum to break further down, which often leads to price and the 18-day average coming together. That's not necessarily bearish because the bias when you're over the 18-day average is still up. But has the market weakened itself? Absolutely. In the gold-silver ratio, you're still above the 18-week average, which favors that gold is stronger than silver on this break leg down. And when you look at silver, you can see you've got the lower highs, lower lows. Like gold, you tell me where the battleground is, that 18-day average. Now, let me give you the scenarios again. In this market, you're not overbought. In this market, if you take out and close under the 1569 level, which you did not do today, that would get the market the bias down, momentum down, you'd enter another level to the downside. Let's assume you don't take out 1563.50, the last break low. Today's low is 1565.50. If you were to take out 1586, the market would reverse and have higher lows, higher highs, calling for a potential test of 1612.80. So I'll be looking at that very hard, and that doesn't mean traders come out and they just buy over that number. You know, they play it, they watch, but I'm forever looking at that pattern, and I can't tell you how many other analysts look on their charts for patterns that are at least in the similar vein, because you're trying to go with the momentum of the market and you're trying to catch that interim trend. In the copper market, we've been calling for a bit of a correction. This was the rally leading up to the trade talks. Now the reality is setting in and we're getting something of a small trade top here, but there's rather strong support between 275 and 274.25. The problem is you lost the embedded reading today, which often leads to a test of the closest major moving average, which in this case is the 100. And then we have to see how the Chinese-U.S. trade talks go. I think this would be one of the winners if they went positive. It will probably be one of those hit the hardest if the talks fall apart. So we have to see what goes on. In the platinum, if you get my morning subscriber video, this was the zone I said, you know, when you hit that lower Bollinger Band, I expect to see the pros do some short covering. I wouldn't be surprised if they did it down there. You've had a trend that's lower highs. You've been under the 18-day average for a while. It completed what I'll call hitting an objective and got oversold at the same time. In the palladium market, we're getting our first signs that the market wants to possibly put on a bit of a correction. We have what's called an outside day down against the upper Bollinger Band, the black dashed line, in an overbought market. So, wouldn't surprise me if you want to pull back. One of the logical areas is the 18-day average of closes. What would throw my idea that you want to pull back out? Take out today's highs and stay up. Don't reverse again down. That would probably capture a lot of traders here. But this has been a strong market. The problem is for all these metals, platinum, palladium, we know that the platinum's got a problem with diesel engines and they're being phased out. Right now, I don't expect the gasoline engine to go anywhere for a long time, and that's going to help this particular market. So you got the diesel, you got these, you got to look at it. But what about world auto sales? You always pay attention to that. And the Chinese consumer doesn't look too strong in this right now. In the dollar index, look, you've come down from here and had a dramatic move to the upside. Now you've closed over the upper Bollinger Band. Nothing says you can't go higher, but as far as I'm concerned, you're overbought, first time over it. Each time we've gotten over it, we've stayed over it a very brief period of time and corrected. I'll stay with what the charts tell me. Whether I can't get in or do get in doesn't matter. How do you catch a move unless it's like a slippery knife? You're going to just come in anywhere. Where's your stop? Very difficult when you get moves like this. We'll talk about this, Chinese trade and so on, in my live webinar. Now, I'm holding this webinar this coming Thursday, Valentine's Day. Let me throw the kiss out there. It's going to be at 12:30 p.m. Central Standard Time, and it's an invite. Now, how you get the invite is we've already sent them out. A lot of people have signed up already. We hope that you're one of them that did. If you didn't, the only way to get in now is to get the invite if you got it in your clutter or junk box, or if you didn't, or if you're not on my mailing list, simply give us a call. My staff will send you the email out. There is no charge for it. Does require a password to come in. That's how it works. So, hope to see you there. I'm Ira Epstein, and I will talk to you tomorrow.